Everyone is talking about the first home guarantee scheme, and I mean literally everyone. And while most people are cheering and stoked over the moon, a few of us are actually worried because this isn't just some policy tweak, some little small change, nuance that doesn't really matter. It could actually end up hurting the people it's designed to help. I've spent a really long time watching these cycles, maybe 8 years, probably 8 years. And I see the same thing over and over again. It is always demand side or demand driven policies that get implemented, stuff that can literally change and bring in droves of buyers overnight. But the core problem never really getting solved. What's the core problem, JP? What are you talking about, mate? Well, I'm talking about, of course, supply. Supply can't just be magically fixed overnight. It requires careful planning. It requires involvement from councils, state governments, federal governments, I think, as well, yes. But guess what? These demand-side policies, why are they so popular? Because they can help win elections. They get implemented or they get announced a couple of months out from an election. They're super easy because all it requires is a signature on some paper or some tweaking of a document. It doesn't actually require any real work, any real solving of the underlying issues behind the housing crisis itself. And I've got a news flash for you. When you've got supply and demand, let's just say supply and demand, and then you implement a demand side policy, which increases demand by this much, what do you think happens? Prices go like this. So anyway, in this video, I'm going to show you what's actually changed, why it could backfire, and also what the smart buyers in the market are doing, would be doing, should be doing. So before we dive in, let's actually talk about what is the first home guarantee scheme, JP. Most people think it's some sort of handout, which it's not. It's actually a structural change to how you can borrow and buy. It's actually only for first home buyers, and it allows you to buy with less than a 20% deposit without paying LMI, which is lender's mortgage insurance. Basically, the government is stepping in as the guarantor for the loan, which enables you to get in sooner while not having to pay LMI, which is basically a lump sum that's added onto the life of the loan and is basically acts as insurance for the banks. So what are the big October 1 changes? Well, the higher price caps in major cities, the income limits have been removed, and you can get in with as little as a 5% deposit. Plus stamp duty, of course. This is not a minor thing. This is a really, really big deal because it's basically throwing the doors wide open to a flurry or a flood or an avalanche or whatever other word you have for it, to a bunch of new buyers, basically, while supply is remaining the same. Like I said, supply is the same, demand increases, prices accelerate even harder than they already are. We're in a rate cut cycle, people. Prices are already increasing. So now that we get what's actually changed, let's dive a bit deeper into that. That being what happens when supply stays the same and demand simply continues to accelerate as a result of genuine real market demand or things like government policy. Before we get to that, my team and I built a property questions toolkit. Could have come up with a better name. We'll have to talk to marketing about that. Property questions toolkit, it's the same thing that we use to identify what the real opportunities are. Grab it via the link in the description. So most people think that lower deposits equals better affordability, but that couldn't be further from the truth. And I'll tell you why. Because the core principle of affordability is actually the supply and demand equation, meaning if there are more people out there competing for the same properties, prices can only increase, and only very, very temporarily, maybe for a split second, will it actually benefit anyone. The government had a target of 1.2 million homes it was supposed to build this year, and we are 66,000 homes short of that goal. This is without the demand side policy or stimulus that we're currently talking about. Newsflash, the guarantee doesn't create new homes. It just creates new buyers. So here's how it's already pretty much playing out, right? The demand side policy, this policy, for example, gets implemented, the prices jump, all the new buyers rush in, and you lose the benefit of the policy within a 6 to 12 month period, maybe even sooner in some locations. It basically just accelerates price growth faster than it otherwise would have been if there was no policy. That's the truth. This stuff is not an accident, right? This is basic economics. This is what happens when you pump up demand while supply remains the same, which is exactly what's happened. So there are a lot of people out there that think that this is what actually makes homes more affordable or cheaper for people to get in. But what actually happens is the incentives get priced in pretty much immediately or in the short term. The seller just gets to charge more because everyone's got more money. It's like as if you were to go to an auction and you give everyone $50,000 more, right? The house doesn't get cheaper. It just ends up selling for $50,000 more than it otherwise would have. If there's a house selling for 1.45 in Sydney, What do you think is going to happen overnight when that incentive hits? Congratulations, it's now worth $1.5 million overnight. So don't be fooled. Please take my advice and don't just buy because there's an incentive. Make sure you're still just focusing on good long-term supply and demand fundamentals. Because yes, this is an incentive that will likely accelerate prices, but it doesn't change the fact that you can't just go and buy in a area and that property is going to outperform long term, right? You might get that quick pump of prices, but what happens in the next 4, 5, 10 years and beyond? You want to still make sure you're buying in a good, solid capital growth location that's underpinned by all of the right dynamics. So you're probably wondering, if they can't do it with demand, well then why can't they just fix supply? Well, to understand the real issue, we actually have to understand, well, why is supply so bloody hard to fix in the first place? You got all these people around here screaming from the rooftops, just build more houses, create more supply. The government's not doing anything about it. And it is, and it isn't that simple, because it's not really a matter of a lack of will, but more a systemic failure. Like the system just isn't built for it. It's going to require all different levels of government, council, state governments, federal, developers, builders, regulatory bodies, all to work together, to band together to solve this issue. And have you seen how bloody slow these governments or councils are, or how slowly they work? You'll know that it won't happen very quickly. All this red tape that the council has, planning reforms, construction costs will need to come down, and the labour shortages or the skill shortages or the trades shortages will need to be fixed. And you can imagine how long all of that stuff takes. While demand can literally be driven up overnight through something like this policy, supply takes a really long time to fix because of all the moving parts. Not only that, once all of that is done, all the red tape is cut, they speed up approval processes. Guess what? It's still going to take 12 to 18 months at a minimum for construction to be completed. And that's just on a single dwelling detached home, let alone townhouses and unit block projects, which take years and years to be completed. So if policies like this are driving prices higher, then what should first home buyers actually do? So what I normally see is most first home buyers are looking to get in at any cost. They totally forget about strategy and positioning for the next kind of wave of growth or what's ahead, and they just focus tunnel vision on simply buying something that they can live in. But the other thing to remember is the government isn't giving you the money for the rest of the deposit, they're simply guaranteeing it, meaning you're still taking on the entirety of that loan. If your goal is capital growth, then don't just jump in blindly. So yes, the guarantee might get you in sooner, but don't go and buy the wrong asset in the wrong location. Most people aren't buying the dream home that they want to live in today. Many are looking to upgrade that home over the medium to long term. Say they want to live in that home for 3, 4, 5 years, have more kids, upgrade that home. So you being able to upgrade that home is completely contingent on its ability to grow in value. So the stakes are very high. Consider your options and whether buying that home is the right thing to do. Is it a good asset? Are you buying in an apartment in a metropolitan area or in a location that might not grow as much? And could you be better off renting or rent vesting for the time being, investing your money in a much stronger growth market so that you can, in the next few years, 2, 3, 4, 5 years, get into that owner-occupier home? So my advice is, if you're ultimately potentially going to be purchasing into an asset that is not going to grow in value or that historically hasn't grown a lot in value, it might be worthwhile buying in at a lower price point in a different market that may be still below those price caps that will see the benefit of the growth, and then using that equity after 3, 4, 5, 6 years to get into that more expensive property that you wanted to live in the first place. And the stakes are massive, hundreds of thousands of dollars over a 3, 4, 5 year period and millions over the long term, because this may well be one of those last remaining windows while prices are on the run for the remainder of this property cycle. But of course, beyond all these short-term buying tactics, there is a longer-term narrative that's being played out. And that is that most people really underestimate, or most Australians really underestimate, what this is going to do for the widening of the wealth gap. The gap between the haves and the have-nots will simply get wider and wider as asset prices continue to grow over time. Because when demand continues to grow and it continues to get stimulated without addressing supply, or if supply just simply cannot keep up, then the wealth ends up concentrating into much fewer and fewer hands over time. And the result of that is ultimately falling home ownership rates, growing inequality, and just a larger wealth divide in general. Ultimately, those who act now are going to be the ones that benefit from this. They're going to be the ones that build real wealth. But those who miss this window are the ones that risk being locked out for good. And I've watched it happen time and time again over the last 8 years I've participated in this property market. Those who act and who do stuff build wealth, build equity. And those who sit on the sidelines continue to get FOMO and say, shoulda, woulda, coulda, should have bought a house last year, should have bought a house last year. It's like Groundhog Day. But here's what you should do. Just say to yourself, if you can't beat them, join them. So yes, if ownership matters to you, then prioritize it. But if you're in a position where you want to build wealth or build equity and you're not ready to yet buy that dream home or potentially a home that doesn't actually meet the needs of what you want, consider rent vesting, consider pooling your funds with others, consider alternative interstate or even regional markets. So yes, the gap will continue to widen and this window will continue to close. And you want to get on the right side of it for your work optional self. Not that you don't want to work, I want to work. But I just want to have the option to not work if I don't want to. I want to hang out with my daughter, hang out with my wife, hang out with my family. Maybe I want to play golf, even though I suck at it. Anyway, you can book a free strategy call with moi. I can show you how to do this stuff. You can potentially get in before the window closes. The link is in the description. So my final thoughts. If the government's goal was affordability, I believe they've achieved or they've helped push the exact opposite agenda. Now, that doesn't mean there isn't opportunity in all the chaos, of course, but while people are focused on what went wrong, you can position yourself well to make a good move. And that's what I'll cover in the next video, which is if I had $100,000 to invest in property, I'd invest it here in where I'm going to say in the video. Types of places. Not the actual places themselves, of course. Can't give away all my secrets, can I? So click through and I'll show you exactly the types of markets I'll be buying in right now. See ya!